Hello viewers, thank you for stopping by at this channel. This is the first of the video series that we are going to put out there. We will be going through the basics of cryptocurrencies to the basics of investing in ICOs all the way to the advanced investments. Objective is to cut through all the hype and complexities around the ICOs, that is initial coin offerings. Alright, agenda for this video is to go through what are ICOs and how is it different from its traditional counterpart IPOs, and then I will go through ICO platforms. The ICO is a funding mechanism wherein companies looking to raise capital sell the crypto asset used in their ecosystem to future participants. So an initial coin offering is essentially a fundraising tool. A, a startup can create a new cryptocurrency or digital token via a number of different platforms. We'll go through these platforms later. Now, these cryptos can be in multiple forms: tokens, asset backed tokens, and coins. Tokens give participants access to particular product or services the company offer. You can think of tokens the same way as getting tokens or coupons at a fun fair. You buy the token initially to gain access to the particular product or services within the fun fair. Crypto tokens operate the same way, wherein they will interact with a smart contract and allow you access to the network for a particular product or service the company is offering. Asset backed tokens are another type of crypto wherein the funds raised in the ICO are used to purchase a pool of predefined assets to which the token holder has a claim on. One such example is USD Tether, where each token is issued is backed by one United States dollar. Now, Tether is called a stable coin also because it is designed to always be worth $1. Coins are used to fuel a specific blockchain platform. Example could be Ether, which is required to process instructions on the Ethereum blockchain network. Coins can be further broken down into crypto commodities and cryptocurrencies. Now we will create contents on this in future videos. Just think of it this way: Ethereum is the platform which uses Ether coin to process instructions on its platforms, and a startup can create a new token to fund its project by using the Ethereum blockchain platform. Okay, the traditional counterpart to ICOs are IPOs, initial public offerings. IPOs are also a funding mechanism for companies looking to raise capital. Instead of selling crypto, an IPO sells shares in a company. Let's look at some of the main differences. An IPO is usually taken by a far more mature, profitable company. ICOs are usually early stage startups, companies, and involve far more risk. IPOs have far more regulatory requirement, mostly to protect potential investors. Companies wanting to do an IPO, for example, have to issue a legal prospectus, which includes key information about the company that is required to make an informed investment decision. Whereas for ICOs, they have very little to no regulatory framework or legal protocol. They issue a white paper to show their intent, which is not a legally binding document by any means. An ICO. So there are certainly a lot of trust which is required in the project and team of an ICO. The third main difference is investor requirements. For an IPO, investing from your home country is relatively straightforward. But if you want to invest in a foreign IPO, there are a significant amount of legal and regulatory hurdles to overcome and usually require the service of a broker. For an ICO, however, with a simple informal KYC submission, you can purchase tokens from almost anywhere in the world. This is another reason why so many companies looking to raise capital over the past couple of years have turned to an ICO. Not only are you usually able to reach retail investors, but you have global scope as well, making fundraising significantly easier. The key differentiator, though, is that through an IPO, you are essentially purchasing a share of ownership in a company and its future profits. With an ICO, however, you are purchasing the right to use the product or service on offer. You are essentially a future customer. And if that ICO has a great project, the demand for the token will derive a positive return on investment. The token does not have any claim on profit made by the company. Crypto and company shares both have vastly different valuation methodologies, which we'll touch upon in future videos. So this lack of regulation gives a sense of democratized early stage investing and allows retail investor access to investments they otherwise would not have been able to participate in. It has always, however, significantly increased the risk that investors are exposed to. It is for that reason that one needs to perform sound due diligence and analysis on a project before participating in an ICO. We will also go through ICO analysis in future videos. Now, coming on to ICO platforms. What are ICO platforms? Crowdfunding platforms that allow users to back promising projects, startups, and companies so they can raise funds with ease. When we speak of ICO platforms, Ethereum is often compared to the Apple App Store in that Apple essentially builds the infrastructure which applications can develop and launch on. In the case of Ethereum, this means that applications wanting to use blockchain technology need not develop their own blockchain infrastructure to launch. With the ease of launching new tokens, there was an explosion of ICOs built off the back of this new infrastructure. ICOs only truly exploded after Ethereum had built the functionality and infrastructure necessary for projects to launch their own tokens and create their own codable contracts. One crucial innovation that Ethereum provided was the ERC20 protocol standard. This standard serves as a template for the necessary functionality of a tradable token. There are numerous other platforms that can facilitate smart contracts and token creation, each with their own specific characteristics and selling point. Neo, for example, has been called the Ethereum of the East. US recently completed the largest ICO of all times, raising over $4 billion to build out their platform. We will stick to making reference to Ethereum ERC20 tokens as this accounts for the large majority of tokens in the issuance today. An example of an ICO built off Ethereum is Basic Attention Token, BAT. The company ran its ICO on 31st May 2017 and raised about $35 million in less than 30 seconds. The BAT token is based on the ERC20 token standard. This standard allows for tokens to be shared, exchanged for other tokens, or transferred to any crypto wallet that accommodates Ether. This is why, for example, on a hardware wallet such as Ledger Nano S, you can transfer and store any ERC20 token to it, purely because the wallet supports Ether. Another benefit of launching an ICO on Ethereum and issuing an ERC20 token is that smart contracts can be programmed to interact seamlessly with the specific tokens. This allows for the company's service or product offerings to be transparent, trustless, and autonomous. The first project to be built on existing blockchain infrastructure was Mastercoin, which was launched on the Omni platform and raised 500,000 US dollars in August of 2013. It was built on Bitcoin blockchain. Although the term did not exist at that time, this became famous as the world's first initial coin offering. 2017 was the breakout year for ICOs on the back of both the of Ethereum and the price gains of the major currencies such as Bitcoin. ICOs continue to evolve with market conditions. As such, participants should be aware of many variations in terms of underlying economic structure of projects. There has been a significant downturn in the amount of fund raised by ICOs in the latter part of 2018. It is important to remember, however, that by participating in an ICO, you are mostly participating as a future customer of a particular product or services. It does take time for these projects to utilize their funding to build the company and network according to their white paper. This is why from the time of the ICOs until the official launch of the company's offering, tokens can undergo significant volatility as they are essentially at the whim of market speculation at that point. ICOs are certainly an important funding mechanism for the creation of new cryptocurrencies. It is very important to understand that not all crypto is the product of an ICO. Many of the cryptocurrencies seen on CoinMarketCap did not have an ICO and are simply a fork of another existing blockchain that developers have altered in some way. So, in layman's term, this simply means that developers copy the open source code that forms the foundation of a specific blockchain protocol, customize some changes, and issue a new coin on a new blockchain. A large portion of the top ranked altcoins are all forks of the Bitcoin blockchain. One such example is Litecoin. Apart from forking a blockchain and creating a new coin, it is also easy for anyone to go and create their own ERC20 token on the Ethereum blockchain. A great way to get an overview of which cryptocurrencies have their own blockchain and which are simply a token running off another blockchain platform such as Ethereum is to go to coinmarketcap.com and on the home page click on the cryptocurrency drop down. You can then see on the drop down menu that there is coins only or tokens only. Now if you go to the coins only, you will see that CoinMarketCap will list all the crypto assets that have their own blockchains, which they have defined these on the website at coins. If you click on tokens only, you will see that all tokens are ranked by their market cap. And you will also see a column that shows which platform that token is based on. This is the column. You will see that most tokens are built on the Ethereum blockchain at this point. So it is important to note that tokens do not operate off their own blockchain and coins do. Remember that it is very easy in fact to create and deploy a token on the Ethereum blockchain. It is also relatively easy to fork an open source blockchain and issue new coins to everyone. It is difficult and costly to create your own new blockchain infrastructure. This is why the vast majority of cryptocurrency you see on this CoinMarketCap are either tokens or forks from a previous blockchain. Alright, this is all I had for this video. I hope you had a great time learning. If you liked it, then please like and subscribe and click on the bell icon so that you are notified whenever we upload new content on this channel. Thank you for